What's going on, guys, and welcome back to another video. So today we'll be doing my weekly Trading212 portfolio update, which currently has 33 stocks / ETFs at the moment. So we look at what I bought this week, if I also received any dividend payments, and my plans going forward. And with all that being said, let's dive right on over to Trading212. So here we are on Trading212. We can see my overall account value at the moment is about €9,500. Again, that equates to about 11,500 USD and about 8,200 GBP. We can see on the left here, about 8,100 of this is my overall own invested capital, and we're up €1,172 or just under the 14.5%. So this month as well, I deposited €500 and putting 125 in each of the 4 weeks. So we're already halfway through that. So we'll have a look now in a few seconds on what I invested this week's €125 into. But before that, in a prior video, I asked a few questions on my community tab. So we're going to have a look at the results of those now in terms of if you believe, that is, if the stock market is currently in a bubble and if there's a crash on the horizon. And my other poll was, when I start my Degiro investing account in a few weeks, do you think I should start buying in dividends or growth stocks? So the reason I like doing these polls every so often is because a lot of like-minded investors are here as well. So it's very interesting to see your input. We can see here in terms of, we got about 48 votes or so in terms of if you believe the current markets are in a bubble, and it's a 50-50 split here, which is interesting to see. Personally, I do believe that we're in a bit of a bubble at the moment. Again, how long more this will last, who knows? But again, if I had to pick between these two, I definitely say we're in a bubble in comparison to fair valued. And the other poll I had up here as well was if you think I should buy dividend, growth, or mixture of stocks for Degiro. And the results here is that 45% of the 60 stated that I should buy dividend and growth stock mixture, like I do on my Trading212. 37% are saying growth and 18% are saying dividends. Now again, I do side with the majority here as well in terms of having a mix. So again, we'll see in a few weeks. I don't really want to use the exact same Tertiary Holdings that I have in Trading212 in Degiro, whichever way you like to pronounce it. So I will be looking for brand new holdings to add there. So this week we got one dividend payment, a massive 30 cent here on Visa. Again, it all adds up long term, especially when it compounds. And again, as mentioned earlier, I invested about €125, or in this case €126.49. 26.49 of this got me 2.5 shares, or just under that, in the iShares Global Clean Energy ETF. Again, main purpose here to dollar cost average. And likewise here as well with Tesla, I now have about 1.3 shares here, so I'm happy with that because my current position is down about 10%, which we'll see in a few seconds. It got me another just under 1/5 of a share here for €100. So I just had a brief look there, and 4 of my tertiary holdings are currently in the red, which is a lot in comparison to usual. And again, it's actually probably a good thing as a long-term investor. It just gives you more opportunities, and that's one of the main reasons why I hold so many positions, is because different sectors react differently to different market conditions, as I always say. So again, that's very important here, especially for diversification as well. But again, having so many holdings will always give you opportunities. And this week we're posed with 4 in the red. One of these is pretty much break even in the form of Nike. But we'll have a look at the other 3 now in a bit as we look through my portfolio pies. And again, next week I'll definitely be taking advantage of this when I invest another €125. So we'll just have a very brief look through each of my pies for this week, and it's interesting as always to see how each of these are actually improving or disimproving in comparison to one another. So it's really important that you do hold a vast array of diversified stocks because they all react differently, so you can take advantage of some, while others, they're in the green, so you just leave them run. And ones that are in the red, you can take advantage by buying cheaper to get your overall cost down as well. First of all, we have my communication services pie up 30.5%, so I'm very happy with that. €622 invested, and we have 2 holdings here. Walt Disney is up 36%, and Facebook is up 25.7%. My consumer discretionary pie is down 2.5%, and we have €1,600 invested here. The main reason for this is Tesla, and again, I'm actually happy that it's down so much because it will give me great opportunities in the long term to get cheaper overall costs. It's down 15.3% at the moment. Now, it's definitely my worst performing stock or holding. It's down €103. And again, this might seem pretty bad, but in comparison to my overall portfolio, it's not really that bad at all. In fact, it's actually a good thing because long term, I can buy more. McDonald's is up 9.3%, and Nike, as I said earlier as well, is pretty much break even, down 1/5%. We then have my consumer staples pie, which is kind of taken off a bit over the last few weeks. This was usually hovering around parity, up about 1% or so, or 2. Now it's up over 9%, and we have €1,290 invested. All three are in the green, thankfully. Coca-Cola is up 13.5%, PepsiCo is up 11.2%, and P&G is up 3.2%. Up next is my energy sector pie, and here is a third of the 4 holdings that are in the red at the moment. My iShares Global Clean Energy ETF is down 11.2%. Now again, this is really a prime example of why you shouldn't lump all your money in at once, because I drip feed money in every so often, every week that is maybe, and it's continued to go down in value more and more every week, which again long term isn't a bad thing at all. So by only putting a small bit of capital in every week, if it goes down further in value, you'll always have more to buy more if it goes down. However, if it goes back up in value, which it will inevitably and eventually, again, that's not bad either, because you're going back into the green. The old kind of 2 old school stocks here in the form of ExxonMobil is up 75.8 and Chevron is up 45.7, give me an overall net result here of about 4.5% in the green. Without sounding like a broken record as well, I like to have about 10% of my overall capital allocated into the 2 main ETFs in the form of the S&P 500 and the FTSE 100. At the moment, it's probably about 7 or 8% of my overall capital, sitting about €806, up 23.3%, and both are up over the 20% mark individually. We then have my best performing pie as a whole in the form of financial sector. Again, this is all due to luck in my opinion and timing. So we're up nearly 40% here. I was originally going to sell out some of these stocks because they're doing so well, so to take the profits. However, I'm quite happy I didn't at the moment, because again, it's going up and up in value all the time. Visa and MasterCard are up 10 and 13.5%. JP Morgan and Chase up 68.3%. Bank of America is up 75.7%, and Goldman Sachs up nearly 100%. Well, again, it's a bit off that, but it's up 92.55%. So this could potentially be my first 100% stock. My healthcare pie is doing fairly well as well. I don't really keep enough tabs on this pie as I should, in my opinion. So we have about €906 overall here, up 14.3%, and all three are happily in the green here. Johnson & Johnson up 12.3%. AbbVie up nearly 29%, and Pfizer is up just under the 9% mark. Another pie I tend to neglect as well is my industrial pie. We have just under €300 invested here and up 27.6%. All three again are in the green. Caterpillar is the one that stands out here, up nearly 55%, and we are also up about 22 or 23% each in 3M and waste management. The next 3 pies here start with my materials. We only have €80 here at the moment, but up 8%. Now these were kind of predicted or suggested by one of my subscribers, Chris. So again, thanks very much for that. Both are doing fairly well, although we have tiny amounts of capital in each. Barrick Gold's up 5.5%, and First Majestic Silver is up nearly 10.5%. We then have my penny stock pie that holds not a penny stock anymore in the form of High Tide, ticker symbol HATID. Now again, this has only recently been added onto the NASDAQ. This position has gone fairly crazy. It was down about 20% or so only about a week and a half, 2 weeks ago. And thankfully, due to this news, it brought it up into 8% in the green. So that's a 28% swing. And now it's down 10% since then again, back down to about 2% in the red. So overall, I'm still quite happy, because again, it'll give me opportunity to dollar cost average. And certainly, it's doing very well in comparison to 2 weeks ago. We then have my real estate pie here, only the one holding in the form of Realty Income, only $69.84 here. Again, mainly because we couldn't dollar cost average since I bought this stock, and we're up about 18% at the moment. And finally, we have my technology pie with 5 holdings here, €1,380 invested and are up 21.6%. Microsoft is up over 16%, Amazon up only 2%, so I'm kind of disappointed with that, because I was expecting a bit more from Amazon, but it's green nonetheless. Apple is up 9.6%, Alphabet is up 58.1%, and IBM is up 21.5%. So that's how my overall portfolio is doing this week. I'll be very interested to know in the comment section below, firstly, how your overall portfolio has been doing this week. And second of all, what do you think I should be doing with the likes of Tesla and the iShares Clean Energy that are down about 11 to 15% each? Do you think I should continue to carry on as normal and dollar cost average in, as I have been doing, drip feeding small amounts of capital in? Or do you think I should give it a few weeks break just to see where the stock goes? Again, if they go down further in value, well and good. Again, we just get in at a cheaper price. But if they go up again over the next few weeks, that just means we're going back to parity or back into the green. So it's a win-win no matter what way I approach it. It is long-term investor. So I'd be very interested to know in the comment section below what your thoughts on this are. Thanks very much for watching the video if you made it this far. I hope you enjoy the rest of your week, and I will see you all in tomorrow's video.